Valuation of consignment stock. Stock is valued at cost or net realizable value, whichever is lower. Now, what does this mean? What is the cost? We computed the cost. In our previous example, we got a cost of rupees 1150. We got a cost of rupees 1150. Now, what is net realizable value? Remember, the cost of these goods was 1000. That was purchase cost by Mukta, by the consignor, was 1000. Then some transportation charges were incurred. Now, the sales value, the realizable value, was actually 1500. Now, what is the net realizable value? The sales value, the sale value less any expenses to incur these sales would be the net realizable value. In our example, if we take the net realizable value per unit is actually 1500. Remember, Kanta was selling each carton for 1500. Less, mind you, there is a 2% commission. So 1500 minus 2% commission minus 2% of 1500, that's minus 30. So we get 1500 minus 30. The stock is 1470 is the net realizable value. So is cost lower or a net realizable value lower? Whichever is lower would be taken as the value of the closing stock. So if for some reason the value of these goods were to fall and the value of these goods were to fall and they could not be sold at 1500 per carton, but they could be sold only for maybe 1000 rupees per carton. In that case, we would take the net realizable value as 1000 less the 2% commission on sales. That is the net realizable value. So how is consignment stock valued? Just like our other stock, consignment stock is also supposed to be valued at cost or net realizable value, whichever is lower, following our principle of conservatism. Now, what is the cost? To compute cost, we would include all costs till the goods reach the place of storage of consignee. Right? That is why we took 10,000 expenses of the consignor, 5,000 expenses which the consignee incurred in transferring the goods from the station to his own warehouse, to his own godown. So cost is equal to cost of goods plus consignor expense plus consignee non-selling expenses. What happens is, from an exam point of view, sometimes they give us consignee expenses and split it into selling expense and non-selling expense. In that case, we consider non-selling expense. Sometimes they split it as recurring and non-recurring expenses. They say consignee's expenses, recurring expense and non-recurring expense. In such a case, we assume that the consignee's non-recurring expense is on account of the consignment, like the transportation charge we consider. Therefore, if nothing is mentioned about the nature of the consignee expense and it is given that consignee incurred expenses of so much, we will assume that the entire consignee expenses are selling expenses. All expenses incurred by consignee is presumed to be selling expense if nothing is mentioned. But if they mention that it is selling and non-selling, then the non-selling expenses are included in the valuation of stock. If they say there are recurring expenses and non-recurring expenses of the consignee, it is assumed that the recurring expenses are regular expenses which would have been incurred even otherwise. They are not added in case of the valuation of closing stock. But non-recurring expense is assumed to be only in connection with the consignment and it is assumed to be the cost incurred before the goods have reached to the godown. Basically, cost includes the purchase cost plus all expenses incurred by consignor plus expenses incurred by consignee till the goods reach the godown, reach the warehouse, reach the place of storage of the consignee.